Elon Musk has finally decided to buy Twitter. Earlier in the year, Elon Musk tried to buy Twitter. However, when he finally signed a buyout deal with Twitter, Elon decided he didn't want to buy Twitter anymore. The Twitter board wasn't amused at all, and they sued the billionaire. They wanted Elon to buy Twitter at $54.20 a share for a total of $44 billion. Elon Musk seemed intent on avoiding the deal he signed, using the argument that most of Twitter's users were bots to try and make the buyout price cheaper. Whether Elon actually cares if Twitter's users are actual humans is up for debate, but what's certain is that he was refusing to close the deal. Twitter obviously wasn't able to satisfy Elon's questions about Twitter's bot problems because they were fighting it out in the courts until early October, when Elon finally told everyone that the deal was back on track. The Tesla CEO even sent a letter to Twitter's board offering to buy the company at $44 billion as long as they also promised to end the litigation and any further lawsuits. The letter reads as follows: Gentlemen, on behalf of X Holdings and Elon Musk, we write to notify you that the Musk parties intend to proceed to closing of the transaction contemplated by the April 25, 2022 merger agreement on the terms and subject to the conditions set forth therein and pending receipt of the proceedings of the debt financing, provided that the Delaware Chancery Court enters an immediate stay of action and adjourn the trial and all other proceedings related thereto pending such closing or further order of the court. The Musk parties provide this notice without admission of liability, without waiver of or prejudice to any of their rights, including their right to assert the defenses and counterclaims pending in the action, including in the event the action is not stayed, Twitter fails or refuses to comply with its obligations under the April 25, 2022 merger agreement, or if the transaction contemplated thereby otherwise fails to close. Twitter is reviewing Elon's peace deal, and it looks like they will accept it. When Elon's decision to finally buy the stock hit the markets, investors grew optimistic and bought more of Twitter stock. Within a day, Twitter stock shot up from $42 up to $52, which is close to the $54.20 a share Elon plans to pay for Twitter shares. The stock price has cooled a little since then, dropping to the $49 mark. On the other side of the market, Tesla shareholders reacted negatively to the news, and there was a lot of speculation regarding why Elon suddenly decided to buy Twitter again. There was a possibility Elon was just trying to avoid the court battle. So why did Elon suddenly decide to buy Twitter? Most are pointing at some of his recent tweets. Apparently, Elon wants to use Twitter to build X.com, an everything app. Comment from a random Twitter user argued it would be easier to build X from scratch, to which Elon Musk replied, Twitter would accelerate the creation of X by 3 to 5 years, but he could be wrong. Some Elon Musk superfans might remember X.com as the original online bank that Elon Musk sold off, the same bank which eventually became PayPal. Others might recognize it as the X Corporation that Elon Musk mentioned at his annual Tesla shareholder meeting in August. Elon expressed he had a grander vision for what he thought the X Corporation could have been back in the day. So what will Elon Musk turn X into? We actually find a clue in Elon's tweet. The Everything app is a term used synonymously with WeChat, the super app used in China to pay for everything from basic necessities to anything a human could ever want in their life. Hail cabs and use their mini programs, which are a stripped down version of an app within the WeChat platform itself. The point is, Elon may be trying to create a super app called X.com based on the WeChat business model in China.
I do sort of have a grander vision for what I thought X.com or X Corporation could have been back in the day. It's a pretty grand vision, and now obviously that could be started from scratch, but I think Twitter would help accelerate that by 3 to 5 years. So it's kind of like something I've thought would be quite useful for a long time. I know what to do. Don't have to have Twitter for that, but it's like I said, it's probably at least a 3-year accelerant. And I think it's something that will be very useful to the world. So.
The banks are not happy with Elon Musk's decision to close the Twitter deal. Back in April, all the banks wanted to give Elon Musk their money to fund the Twitter deal. So what changed? The economy changed. Right now in October, inflation has set in, rising interest rates, economic uncertainty, and a troubled market has made banks hesitant. Barclays, Bank of America, and Morgan Stanley may not want to lend Elon Musk their money because it could get very expensive for them. Banks usually make money from the fees they charge to get these debt financing deals done. Banks had expected to be able to sell their debt after the Twitter acquisition was over, but right now, no one wants that debt. The high interest rates and recession fears have made risky debt that leveraged loans a horrible investment. The economic uncertainty in the markets means that if banks sell the debt now, they will be forced to sell at a loss. That would mean hundreds of millions of dollars lost that the bank has to write off. The problem is the banks have already committed to lending Elon the last $12.5 billion he needs to finance his Twitter deal. In a surprising turn of events, some analysts believe that Elon Musk might be using the bank's reluctance to finance the Twitter deal as a way to back out of it, and his decision to agree to buy Twitter was a way to get an advantage in future court cases in case Twitter chooses to sue him. If the bank decides to back out and the debt financing falls apart, Elon could walk away without paying the $44 billion he promised Twitter. Elon would only have to pay $1 billion in breakup fees instead, an amount that he can definitely afford as a billionaire, especially when it's 44 times less than what he was supposed to pay out initially. The bank's inability to sell their debt and losing money after financing deals has been commonplace this year. In a recent buyout of Citrix Systems to make it private, the bank couldn't sell their debt and was forced to add a 16% discount to their bonds and sold more than $4.1 billion worth of debt and a 9% discount. This meant that banks were forced to swallow over $600 million in losses, considering the banks only made roughly $192 million in deal fees. $600 million is a steep loss. None of the banks want to sell roughly $13 billion worth of debt at a discount. Honestly, banks could have saved a lot of money just by not giving Elon the loans to buy Twitter, but that would come at a loss of reputation. Currently, the judge overseeing the Twitter case has postponed the trial so Elon Musk can have more time to get his finances in order to buy Twitter. If Elon Musk buys Twitter, there will be no court case because he will have fulfilled his contractual obligations. Elon is expected to complete the Twitter buyout by October 28. Whether Elon will actually decide to close the deal or battle it out with Twitter in the courts will be up to him. Thank you for watching the video. Like and subscribe.